welcome to the Market Rag for this beautiful Monday, December 17th, 2007. Looks like the downtrend's continuing here on the short time frame. Big move down over 1% across the board, and NASDAQ taking a big hit, being down over 2%. That was equivalent to almost 200 Dow points we were down today. Not too much action here in the commodities area. The best kind of mover in this area was the bonds, and I want to show you guys a chart of that. As we look over here, we're still dealing with the same thing we've been dealing with for a while. The only change I really see is we're starting to get a little bit more red here in the short time frame. Commodities, again, still pretty green in the big, but we're starting to run into a little trouble here, mainly with the euro, which is good for our dollar. The one thing I want you to note is notice your small caps. They're just getting destroyed out there. Looking at the S&P 500, we had this little floor put in over the last couple days of last week's trading, and we took it out today on some pretty decent volume. Here's the NASDAQ, taking it the hardest out of all three today, and again closer to the bottom of the channel than the rest of them. Oil still just chopping around here, and it looks like it's trying to put in this smaller lower high in place as we continue our sideways chop. The same situation with gold right now. And the bonds chopping around this line in the sand. Again, above this line I'd be pretty bullish on bonds, and below it pretty bearish. But for the time being, we're just stuck right on it. Coming over here to our sectors, a lot of our optimism has left the market. Energy, which was doing pretty decent, got hit today. Materials, which was the biggest loser today, was kind of trying to find its footing. The main problem areas remain the same. You got the financials, and right now it's the consumer discretionary taking it the hardest on the chin. The semis, again, look like they're headed to the bottom of their channel like we talked about on the weekly edition. And here's your big loser today, being down over 3.5%. The materials ran back up to this resistance area, and it's pretty clear now which direction they want to head. The industrials clearly under our line here. Even the consumer staples, which had been doing pretty good, is starting to fall here. Looks like it's slowly setting up for a nice window to go long, but in this market environment, it makes it tough to place these orders. Utilities are right back to our line in the sand. It broke out, everything looked good, but we need to turn around here if there's going to be any positive action in this group. We got stopped out of all our trash today. We got taken out of our CSIQ trade and our TIF short. So we're basically sitting with the majority of our allocation in short. We actually don't have any long positions left. Given the fact we've got about 31% of our buying power, or 62% of your cash, short right now, I'm a little hesitant to take on too many new positions. The one good thing is when we look at our risk, we've got very little risk. This risk comes all from our new Hansen trade we took today short. As we come down here and look at our closing R value, you can see we're sitting on quite a bit of profits. A lot of those shorts really worked out for us today. Here's the CSIQ trade we got stopped out of, and look at that, down over 10% today. And some of those orders we had in long, like this ASTI, this is why you asked for confirmation. Our order was to go long if it could break this high. Look at this selling today. I don't want to be long that stock. Same with FCSX. Had an order to go long if it could break this high. No buyers around today, people. I'm going to go ahead and remain neutral here. I'm going to leave just those two current short orders we have, and I'm going to go browse around and see if I can't find any nice looking longs for us. I just want to have a couple of those orders out to the upside just in case we get a bounce.